All right, welcome into our weekend market talk and our first one this year. Today we have two special guests, Cantonese Cat and Matt. How are you guys?
Doing great.
I'm here, just hanging out.
How do you spend the New Year's Eve?
Yeah, Kat, how did you spend it?
By myself, and very, very amusing by myself as usual. What about you guys?
Yeah, I did the same thing. Just stayed home, didn't want to deal with the coldness outside, so it was very uneventful.
Yeah. So this is our first market talk for this year. We didn't have one in quite a while. What do you guys think on the markets currently? Any changes from our last collaboration?
When was our last collaboration? It felt like it's been a while. It's certainly seems to be every single time we go on, there's a lot of fear, a lot of scary stuff going on, and I guess people still scared, but the market look, I'm not. The emotions are high. The people are still not that interested, and the market is just doing its thing. So.
Yeah, I mean, last time, I think the only time we usually go on and there's fear, but now there's really no fear except for, there's new tariffs talks going about next week, 10%, right, for the Greenland stuff. So that could be more fear coming out there pretty soon.
Yeah, I mean, over the last couple of weeks and months, we've been essentially in the same range, especially for risk assets and Bitcoin and the overall crypto market. We've been inside the same range, inside this chop phase. Nothing has really happened. There has been a lot of fear going on, constant rejections, constant shakeouts. And I think that this period has really been marked by a lot of fear, right? The fear of unknown, what could follow next. And I think that's totally normal. But the main concern I have, and I'm sure that the people watching have the same concerns as ours, is why didn't risk assets move alongside the traditional assets and more traditional markets like the S&P 500 or like commodities such as gold or silver? What do you guys think on that?
I mean, I would love to see some of your charts because I do think that there's nothing unusual about where we're at the cycle. I think there's a lot of rotation that's happening under the scene. And I think the liquidity is there. Is just the rotationary forces that need to play itself out. While they're doing this quietly, usually there is a lot of people that get disinterested and get scared and ask a lot of questions. I think it was designed for them to do that. So.
Yeah, and for me, I think there is liquidity coming in, and the IWM is proof of that, but it's just not rotating into crypto yet. But like Kat said, I think it is being accumulated quietly because levels are still holding for a lot of the altcoins, and especially Ethereum too, but we'll get to that later.
Yeah, in my view, because there have been so many changes in the overall macroeconomic environment with the Fed stepping away from their quantitative tightening policies, with the geopolitical risks and issues going on, right, with Greenland, and nothing is really certain this time around. And with the tariffs talk, with um, the war being declared on Venezuela. So there have been a lot of talks going on and a lot of fears. And I think that's the main reason why liquidity hasn't flown directly into risk assets. Because in order to have rotation towards risk assets, in my view, we need to have a really high risk appetite in the overall markets. And because we've had so many changes and uncertainty going on, liquidity has first went into more traditional assets and assets that are considered safe havens, such as gold or silver. But now I think we're entering this phase where profits will start getting taken out of these traditional assets and start being rotated into risk assets. And this is exactly the same concept that happens in the crypto market, where we have an alt season right where the cycle top for Bitcoin is, like we've seen back in 2021 or like we've seen back in 2017, because that's where the most risk appetite is in the markets. And I think that will happen on a broader scale with the overall markets.
I think that's that's certainly how do you say that? People always gonna throw different things at a certain liquidity juncture. There's always going to be different little scares here and there. I think it's going to throw not just retail off, but I think the manager's also going to get thrown off as well. But I don't know who actually moves the market, man. It just seems like the cycles still seem to be playing out more or less how it's supposed to be with IWM, just building a base for about 4 or 5 years, and, as IWM is making all-time highs, there's still all these different fear narratives going on, and also Bitcoin is not doing well, so it's pretty interesting in terms of how the market dynamics are going.
Yep. So I have here a chart I want to share for Bitcoin because so far, as I've said earlier, we've been inside the same range, right? Bitcoin didn't really go anywhere over the last 2 months. But now we have the first major development, which is this reclaim and breakout above the lost high time frame support range from 2024. So if we zoom out here, we see that this has been a pretty major POI and reversal point. So initially, back in November of 2024, it has been a very strong resistance. Here, it led to this rejection. And after that, after the price broke above it, it served as a very strong support point until February and early March of last year, where it served as a rejection area, which led to a continuation of this downside. As we'll remember, back in early 2025, the first 4 months were pretty atrocious for Bitcoin, but then it served as a support once again. But since the price broke below it back in November of last year, it served as a resistance once again. And now we had this breakout above it, which is the first major development we've had in over 2 months. And I think that going forward, the most likely outcome for Bitcoin from a technical perspective, and I would like to hear your thoughts on this as well, is this quick retrace towards this prior high time frame resistance before a continuation to the upside. And I think that this, as we'll cover in just a bit on the Velo data, as we have some really interesting developments there as well, is to act as a very strong bear trap, where bears are going to start doubling down on their shorts, thinking that this has been just a fake out, just a deviation above this high time frame resistance range. This is where I believe bears are going to start doubling down on their shorts before a continuation to the upside. And this is really the main reason why we have so many fake outs, so many deviations, and so many shakeouts, right? And flushes like we've seen over the last couple of weeks, is to flush over leveraged traders from the markets. Because before we have any sort of real directional move, leveraged traders must be out of the market. And the majority of people, especially retail investors, need to be on the opposite side of the trend before we have any sort of real directional move. So what do you guys think on this? Do you have charts or key levels you track?
I got a chart here that I want to show. Just switching to my screen here. Yeah, aligning with what you said, Luca, perfectly. This is a great fib to watch from the 2024 top in March and the 24 bottom in July. we can see that this 94,357 is actually trying to get reclaimed for a weekly candle close right here today. And we have not seen this close above it since it broke below back in November, kind of like exactly what you said too. But these fib levels have actually been very accurate, especially this 1.414, because this 87,003 actually, there's only been one candle that kind of closed below it, but every single other one has been writing it as a support until things are trying to break out. So I think it perfectly illustrates that this whole correction thing is about to be over, and I think we're about to continue to the upside. And I think this 94,000 zone is actually very important to reclaim, and if successful, I think we'll see 100,000 shortly after. So eight more hours, right? 8 hours, 47 minutes. We'll watch this weekly candle close, see if we can get back above it for the first time since last year, and that would be really, really bullish, I think, for continuation. What about you, Kat?
Yeah, if you want to flip over to me real quick, I have let's see, I've taken your courses, of course. You know, I drew a Gann chart here. I've done that many months ago. I think I started tracking this maybe around like August, September. It's just been playing out very well, unfortunately. So it broke down underneath the angle, broke down underneath the horizontal. Originally, I thought, hey, you know, maybe this arc over here would hold. Nope, ended up breaking down. This market structure here is just extremely terrible. Finally found some stabilization here at the at around the 85,000 range, and it formed a pretty decent formation. I mean, this looks almost like a perfect Adam and Eve double bottom, even though a lot of people are calling this to be a bear flag. You know, there are some folks out there that do see like an ascending triangle, where this is the supply and the demand is slowly, steadily increasing. And we finally broke through the supply and we basically just back testing that zone, right? How low does it get? I don't think anybody really knows, which is why we don't usually draw a line. We draw an area. I think it's important to understand that there is not going to be one single level where things are just going to hit. It's always going to be a zone. So I think that it's possible it goes down lower, but it did end up flipping this arc over here from resistance back into support. And that's promising. And if you don't use any of this Gann stuff, you just eyeball it. Like, this looks like a very decent breakout of this horizontal zone and a back test. And even on Binance, like, the volume on this back test is like non-existent. So yeah, I think it's fine. It could go down lower on low volume. And I think that if it does do that, then it would be you know, a good buying opportunity for the market. You have the 20-day moving average very, very much upward trending. So if it ends up going back down to that zone, I think you're going to find some pretty decent support there. And just kind of zoom out here, looking at the daily chart, you can see how the trend has really changed. There's really nothing magical about, you know, just following the line. The 20-day moving average really has been flipped from resistance here into support, and it's been forming higher highs and higher lows since then. So there's really not much to add about. Now, could this be like a fake out and we end up breaking down and make another like lower? Maybe, but I just think that we have a lot of supports down below and the sentiment is not really that great. Actually, I'd be interested in hearing Luca's perspectives in terms of, you know, like the leverage condition, open interest, and things like that later. But so far, the chart's looking fine. A lot of people are going to scream that this still looks like a bear flag. I don't know what you guys think about that. So, Luca, any thoughts on the bear flag?
Well, I mean, it's a low time frame bear flag, so of course we could have a continuation to the downside in the worst scenario. In my view, we have a very strong correlation with the USDT dominance. So if you could flip over to me, I'll be glad to share my views there as well. Yeah, so here we have the USDT dominance. And the thing with the USDT dominance is that it has an inverse correlation with the crypto market. Now, throughout this bull market, we've had this high time frame resistance range, which has been the main POI we've had to track. So we all remember all the corrections and pullbacks we've had throughout this bull market, right? Back in December of 2023, when we had that ending of the consolidation phase we've seen for months. to that point. We all remember January of 2024. We all remember what happened in the summer of 2024 with all those crashes and yen carry trade pullbacks and fears going on. September of 2024, early last year, right in April of 2025. And what really struck me was the fact that this was the same high time frame resistance range that ended all of the pullbacks we've had on Bitcoin and the broader crypto market throughout this bull market. And this time we didn't have a rejection. We didn't see a very quick rejection and pullback like we've seen the last times this range got tested. Instead, we've had this distributive phase where the USDT dominance has kind of struggled for a couple of weeks to break above this range, and eventually it rejected once again. And now we're seeing a breakdown in the USDT dominance. And I think that this is much healthier for Bitcoin and the broader crypto market, that we've had an accumulation phase like this, which lasted a couple of months, and this distributive phase in the USDT dominance, because I think this is what leads to a larger rally in the broader crypto market. And this is the main chart that we should all be paying attention to, whether the USDT dominance returns and manages to reclaim the 1-day bull market support band or the 2-day bull market support band, as they're both important POIs to track, right? So this is the 1-day bull market support band. If we switch to the 2-day bull market support band here, we see that it has been a pretty strong reversal point throughout this bull market, right? Here it acted initially as a strong support point, and eventually the USDT dominance broke below it, and since then it acted as a strong resistance until August, when we had the top in Bitcoin and the broader crypto market as well. And since then it has been a support once again until now, when the USDT dominance broke below it once again. And it kind of seems that we had this rejection here, this bearish backtest. So unless the USDT dominance can manage to somehow break back above the 2-day bull market support band and then make its way to break above this high time frame resistance range as well, something like this, I think we have nothing to worry about on the high time frames. In my view, nothing has really changed, and I think that this consolidation phase has been really healthy for the broader crypto market. It has shaken out a lot of the market participants, especially the over leveraged and impatient ones that didn't want to stay in their spot positions, didn't want to stick to the plan, or gave in to the fears and anxiety of holding. And I think this has been really healthy. Now, of course, the markets are all about adapting and being able to remain flexible even in the most volatile times. That is what I've tried to do. And I think that as an investor, the most important thing you should have is flexibility in your portfolio and the ability to adapt yourself in the most volatile times, and having a portfolio that allows you to. And that is something that you can do by having a diversified portfolio across multiple industries. So what I've done over the last couple of weeks is to gradually reduce my exposure to defensive sectors, because I remember in our last collaboration, we were talking about portfolios, and we all agreed that the best approach was to have a diversified portfolio that, you know, even if we're bullish on the high time frames, we shouldn't be impatient, or we shouldn't be reckless in terms of using leverage, in terms of using overexposure. And that end up being the best approach. Because even if we have a bullish view on the high time frames, the low time frames somehow can sometimes catch us off guard. In that case, we must be able to adapt ourselves. So going forward, I think that the best approach is to track further developments to see whether the USDT dominance continues to be below and stay below the 2-day bull market support band. And as long as that is the case, I think that the midterm outlook and the high time frame outlook remain bullish.
Anything else to add to that, Matt?
I mean, USDT dominance also continues to go up throughout the bull market too, because they keep minting new USDT and everything else as well to put into the market. So I think it's not necessarily a bad thing if it does break out.
Yeah, I'm looking at the if you look at you flip over to my chart over here real quick. What I have here, the top part here is the USDC dominance plus USDT dominance. So it's the percentage of both USDC and USDT stablecoin dominance, basically, right? And then bottom here is the price of Ethereum. There's going to be a point where the stablecoin dominance is going to shoot up to the sky during a bear market. Like there's going to be that point where there's going to be a flight to safety. But at the beginning stages of the bull market, there's actually a possibility where maybe there's just rotation from Bitcoin to stablecoins to get ready for like altcoin season or something like that. There's actually a possibility where there are times where you can actually have increase in stablecoin dominance and a pretty parabolic phase of the bull market in terms of Ethereum doing really well too. Especially during like the beginning stages over here, you can see how when we're trying to break out from this base over here, that's actually when US dominance, actually when USDC, USDT dominance is actually going up and stablecoin actually going up, maybe setting the stage for something, right? For something like Ethereum is having like boom, 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 like 6 green candles going up when they finally deploy this dominance downwards. So I wouldn't necessarily get scared about increasing in USDC or USDT dominance in the short term, especially if we still think that we are just kind of forming a base here for Ethereum for it to potentially break out. But I think it's something important to watch because it does signal a shift to the market dynamics. So I just want to make sure that yes, we're watching it, but we also have to take into consideration of what it could potentially mean for the broader market as well. So. I think, Luca, you were mentioning about how more traditional assets doing well. I think I wanted to show something too. I think a lot of the people are really getting a little bit more euphoric on precious metals, particularly gold, silver. I do think that they probably have a very strong bull trend, and I think there's probably more room for them to go up. But I just want to kind of lay side by side here with like a silver 3-month chart here with Palantir monthly chart here, because both of these have basically gone parabolic. And I just want to do a little bit of a comparison here because their fit levels actually line up pretty well. You can see as Palantir is kind of breaking above back in 2023, finally breaking above in 2024 of the 0.618, and it was kind of hovering between the golden pocket between 0.618 and 0.786 for a while, and once that gets broken, it really just gone parabolic, right? Up until it gets to the point around the 1.272 and 1.4 which is usually an area where things tend to consolidate. Silver is basically doing the same thing based on these fit levels, right? Break above the 0.618, finally breaking about the 0.786, break out of the golden pocket, it just went up to the moon. And finally got into that pocket between the 1.272 and 1.4. So I do wonder whether or not there's going to be a little bit of rotation happening. Not to say that silver is not going to keep going up because it's a very parabolic bull trend, but it's like way outside the 3-month upper bull in Japan. It's just really overextended. It could use some cool down. This would be a logical area for it to cool down. And if it does, silver and gold is basically showing us that there's enough liquidity potentially rotate out to other assets. So I just wonder whether or not we are at the juncture near having that liquidity kind of spilling over to other things when things like this just throws people off and people get euphoric about things at the very, very risky areas and ignoring things when they're actually good opportunities. Luca, what do you think about that?
Yeah, 100% agree with that. And I think that The main reasoning why we didn't see this rotation until now is because most liquidity has went into traditional assets, right? And has went into commodities, has went into gold, has went into silver. And as I've said earlier, I think the main reason behind that was because liquidity doesn't flow into risk assets when there is uncertainty in the markets. But now, when all the dust is settling and the markets sort of digest new information that we're entering a new macroeconomic environment, that the geopolitical issues are solved now, and what I think that when the dust will settle with everything, that's where profits will start to get taken. We're already seeing this kind of behavior with the strength of the move up sort of weakening, but so far liquidity is still flowing into these traditional assets, which I think is not a bad thing, right? Because it signals that there is a lot of liquidity in the markets. All countries are pumping liquidity in their economies, right? We've seen the Fed stepping away from their quantitative tightening measures and gradually transitioning towards a quantitative easing environment. We're seeing China pumping liquidity in their macroeconomic environment. Europe is doing the same. So I think that liquidity is not an issue, but the risk appetite in the markets is for the time being, which is once again a good thing. It signals that the 4 year cycle may be invalid. It signals that this time might be different. And of course, this cycle has been completely different from what we've seen before, because before in prior cycles, we didn't have what we had in this current cycle, which was a gradual move up with constant accumulation ranges, constant, you know, chop phases, and simply put, so far it has been completely different. So what if the outcome is completely different, if the how we got here is? That's what I've been thinking, and I think that considering the overall macroeconomic environment, considering that liquidity is still plenty in the markets, and considering that the economy of the United States is still resilient, with the labor market still somewhat strong, with the consumer data still somewhat strong, this time might actually be different. And we might see a longer cycle than what we've seen in the past. So that's what I've been thinking. And it all makes sense, right? To think about that, to think that liquidity will start getting rotated from the traditional assets towards risk assets. But as I've said before, I think that when that rotation happens, that's the real warning sign, because it signals that the majority of investors are seeking risk. And that's a period which market makers use in order to distribute. So the fact that we didn't see this rotation until now is a good sign on the high time frames, in my view. Now, something I want to share here for the IWM, which I would also like you guys to share your thoughts on, is the fact that we're seeing some signs of strength and some signs of being alive, right? Because so far we had this very obnoxious accumulation range from September of 2025 all the way up to November, right? When we had this breakout above the 1 day bull market support band. And now the price is going up, right? Now I think that since we're in price discovery, the best approach is to focus on the POIs we have, which is the 1 day and 2 day bull market support bands, as they're both important POIs to track. And this high time frame resistance range between the 1.404 and 1.618 Fibonacci extension levels, between $275 and $290, where I believe that rejection might occur, or we might have some sort of distribution. So that's where I would start being a bit more cautious on the midterm with my positions in small caps. But I think that as long as the price can manage to hold above the 1 day and 2 day bull market support bands, we really don't have anything to worry about for now for the IWM. What do you guys think on this chart right here? And you guys have any thoughts on small caps going forward?
Yeah,
Matt, I'm gonna let you talk because when I talk, I'm just gonna keep talking. So go for it.
Yeah, I'm very brief and quick to the point, but yeah, I think small caps are going up, and I actually have a perfect illustration of this with the leveraged version, which is TNA. I know it's one of Cat's favorites, and it broke out. Right, this is a very important chart for me to observe because this arc right here, it broke out, and this is a 2-week candles, and you can see it was a massive resistance, and which kind of led to the bear market in 2021, 2022, and it basically collapsed, and it has not reclaimed it until last week. So this is telling me that things are really getting in favor of more risk on, and I think it also means that maybe crypto can follow suit as well, because this breakout is pretty important. But not only that, like, we can also put on a fib from the more recent high and low, and it also broke slightly above that 6182 for the very first time since it broke down back in February 2022. So this leveraged version of IWM is just looking very, very juicy to me at the moment. So it just is telling us, or telling me, that I think there's plenty of room to go up to the 60s, 70s, and maybe even back to the hundreds for the TNA, which could be very explosive for IWM. So ultimately, what I'm really watching for this is just to maintain the arc, right, which is really around the 53 zone. So basically, if this can keep just hovering and flipping it to support, we'll see small caps continue higher. And I think sometimes when we look at the leverage version of what's breaking out, it's telling a story that there is a lot more liquidity coming into the market.
And we know how much you love liquidity coming into the market.
Yes, I love liquidity coming everywhere.
I did not ask you to say that, but thank you for that information.
You're welcome.
Do you see any? What are your thoughts on like gold and and things like that? Traditional assets. Do you feel that it's at a juncture where things could change as well? Uh-oh, silence.
Oh, sorry, I was on mute. Yeah, and I think gold might be in a topping process, but I've been saying that for months now. But usually, topping processes do take a long time because it's not going to be immediate. But ultimately, I think the reason why gold and silver and all those precious metals are continuing to go higher is because liquidity has to go somewhere, and maybe the infrastructure for crypto is just not ready yet, and so that's why everything is waiting. But I can see a rotation out of it and into the crypto markets, which could lead to very, very exciting times.
Yeah, because I remember seeing a few charts of yours. That was pretty interesting. Well, you handed me the mic, so I'm just going to keep going at it. I just want to start out here with, a lot of the traditional candlestick patterns. If you just simply look at the November candlestick, oh no, that's a hammered top, right? Or hanging man candle. That's bearish, right? It was followed by another really bearish candle over here. This is like a gravestone doji. It's extremely scary. This is supposed to go like this, right? But it ended up doing like this. So I think the key story is don't just follow candlestick patterns, especially on the monthly. I think a lot of people were pretty scared at the juncture back in December, especially when it printed out with a candle like that. To me, I think it reminds me of what happened over here before the breakout, because you can see how it has like a wick down below to grab some liquidity down below, very similar to this hammer candle over here, and then you have this nasty inverted hammer candle over here, very similar to that. So I think this is like a pretty traditional breakout. I guess what I'm trying to say is I don't really think that this cycle is really necessarily that much different from the previous cycles. There are a lot of things that I would like to kind of unpack here. When you're talking about large cap and small caps, and I honestly believe that this cycle is longer because the best gauge of liquidity is probably IWM, is probably Russell 2000. And a lot of times we talk about Russell 2000, a lot of people are like, why are we talking about this? Well, that's where all the small caps are at, and small caps are supposed to be the backbone of the economy. They are more debt sensitive. They don't have as good balance sheet. They need to borrow money, and they're going to be a lot more sensitive to the macroeconomic environment, and they're more cyclical compared to the QQQ, like the Nasdaq, right? You're talking about the Nasdaq, basically things tend to just keep going up to the right because a lot of the large cap stocks are being bought up with 401ks. A lot of people just set it and forget it, and look, when liquidity comes in, it just goes straight to these large caps and they just keep going up over time. But when you have improving liquidity conditions, usually it translates into finally having these small caps performing well, like the Russell 2000. And pretty much every single time when liquidity comes in, based on 4 different economic cycles here, which I'm showing you, that happens anywhere around 3 to 5 years. This one's probably the longest of them all. IWM has built up a base. It hasn't really break out into all-time high for about 4 years until just a couple of months ago. Before that, the base could last for like 2.5 years here. The base can last for maybe like a year and a half, 2 years over here. This is the longest that it has ever been. So there's a lot of liquidity that's being trapped somewhere that hasn't really been been shown up here. And there's also a huge accumulation that's been happening with big money just buying things up and being patient. And liquidity conditions actually has been kind of going sideways. You look at the global, M2 index. Actually, I'm not going to show that, but it's been going sideways over here for about three years. It's been longer than it's ever been, and now you had a breakout. What generally happens with a breakout from previous cycle? On large caps, whenever you have a breakout on the small caps, large caps had ran for a long time. It just kept making higher highs and higher lows until it consolidates and wait for the rotation to happen, right? That happened here in 2012, 2013. That also happened here when you have a breakout here around 2016, late 2016, you have consolidation of the large caps, and then they ran together after the rotation happens, right? Same thing happens over here back in November of 2020. You have a breakout here of the IWM into all-time highs. What happens with the QQQ? What already had is 5 big giant candles on the way up here, so it's cooling down, right? That's what it does, is rotation. And then what happens after rotation happens? They both ran up. Right? What's happening right now? We have IWM breaking out of the previous all-time high. It finally is doing that over the last couple months. And what is QQQ doing? What is the large cap stocks doing? What is Amazon doing? What is Nvidia doing over the last few months? Nothing, right? It's just basically playing out very similarly. And I just want to illustrate that with Nvidia as well, because Nvidia, I also think that is more of an economically sensitive stock, is also a growth stock. It's been performing extremely well. It's been making higher highs and higher lows. Why is it not doing anything over the last 4 months? Does it mean that Nvidia's fundamental is not as good as it was before? Does it mean that the AI narrative is over? Not necessarily, because if you look at the previous cycle, it basically is playing out very similar from before. You can see how when small cap finally have enough liquidity coming in, and they're finally starting to look healthier and healthier, gearing up for a run up after breakout from the previous all-time high. You can see how Nvidia just kind of consolidates here for how many months has it been consolidated here? For about 5 months. Same thing here during the COVID era, 2022, with increased liquidity. Small caps have been lagging until November 2020, when there's just enough liquidity to kind of punch it through. And Nvidia did what? Consolidate sideways here for about 7 months. Did nothing, right? What is it doing right now? Well, the Russell 2000 is making all-time highs here with a big giant green candle, and Nvidia's just been doing nothing for months. I don't think it's necessarily that different compared to before. I think liquidity is just kind of rotating into where they need to rotate to. And I would even end this here before I just keep hogging the mic with Bitcoin. As far as I'm concerned, it's also been playing out. A lot of people are saying 4-year cycle, 4-year cycle, 4-year cycle. That might be true. I just never really believed that economic cycles have to run in every 4 years because of the calendar. Like, that doesn't really make sense for me. You can argue, well, the reason why that is because of Bitcoin halving, and I would argue with you that with institutions coming in, with the fact that there's not really that much more Bitcoin to be mined, is Bitcoin halving's effect on Bitcoin prices that big, or is it more in line with the overall economics and the overall liquidity conditions? I would argue that it's the latter. And I would argue that the IWM Russell 2000 has been showing that the economic cycle this time is just a lot longer. And that's why Bitcoin has to consolidate longer before its potential breakout. I am seeing more or less very similar pattern here based on liquidity as signified by Russell 2000. in terms of the juncture where we're at right now with Bitcoin. And Bitcoin has been consolidating sideways over here for a couple of months while IWM has been breaking out. Same thing over here, consolidation while IWM is breaking out, consolidation here while IWM is breaking up. I don't really think that this cycle is any different, except that it's not fitting into the 4-year time frame. I'm going to give the mic back to you guys.
Yeah, actually, I want to add one more thing to illustrate what you're saying too, with SPY, QQQ, and IWM. So here we are, like using the same time frame from the 25 top and the April crash. Check it out, SPY right here, it's at resistance, right? QQQ, same period, it's at resistance. IWM, on the other hand, look at that, it broke out. Right, it broke out of the 1.272. So this is even more confluence to what Kat is saying, how maybe they're going to consolidate for some time while IWM just keeps going higher. Right, maybe it's time for crypto to shine as well. And I do want to illustrate some dominance too with Ethereum and Bitcoin, how it's actually reclaiming the 50% fib from the 2017 top and the 2016 bottom, right? This is an important fib, and getting above that 50% is super important. And the reason why is because when we look at the previous cycle here from way back in 2016 and 2015, that 50% was right here, right? It was touched right there and it bounced. But this time, it took a very long time to basically get a lot of liquidity underneath it multiple times, and now reclaiming it is also good. So this is even more confluence, in my opinion, with IWM, that I think it might be time for crypto to continue higher, because when you zoom in here, reclaiming that last week, actually it was a sneaky close the last couple of weeks, and we can see that it is continuing higher from that 50%. So I think it's time for that consolidation or just boringness for SPY, QQQ. They are at big resistance zones. So I saw a comment that, is the market going to crash on Tuesday? I mean, it's at resistance. And of course, there's narratives of tariffs right at resistance, just like before. But one thing we got to watch is IWM is at support. It flipped that 1.272 to a support last week. And also, or not last week, this week, it was the very first weekly candle close, right? We can go to the weekly candles here. Very first weekly candle close above that 264, while Ethereum is outperforming Bitcoin, and I think that outperformance is going to continue too. So just the risk on narrative is stronger and stronger, in my opinion. Luca, back to you.
I actually have a question for Kat. Because we've talked about a lot about US equities, but what do you think on the Chinese market? Because I think that's a really strong confluence at the moment.
Oh, Kat, did you run away? Are you on mute, Kat? Kat, where'd you go?
All right. So I'm gonna continue in this case with what I had to share about the on-chain data. So if you could flip the chart over to me. This is a post I've shared a couple of days ago regarding the Velo data, which I track quite often. And this is a very interesting development, right? This is while the price was going up. So while the price was going up, we had the open interest also going up, which is quite normal. But this is where it gets really interesting, because if we look at the funding rates, which measure the ratio between longs and shorts, funding rates actually went into negative territories. So that means this spike in the open interest was not from longs, but from shorts, and from bears doubling down on their shorts in order to avoid liquidations. And I think that this is just another very important highlight of the current market environment, where people are trying to still bet on the potential of a breakdown. And the most likely outcome is that we're not going to have a breakdown. And as I've said before, as I've covered for Bitcoin, I think that the most likely outcome now is to have this quick retrace towards the prior high time frame resistance range before a more durable continuation to the upside. Now, I also want to talk about Ethereum. So Ethereum here has a very interesting market structure, because we have this very important high time frame resistance range, which has previously been a strong support point. As we see here, it acted as a bounce area as it aligns with the golden pocket between the 0.5 and 0.618 Fibonacci POIs. And now we're seeing some signs of strength because Ethereum managed to break above the one-day bull market support band, which, if we look here, throughout all of these past months, it has been a very strong reversal spot. So because of this, I consider it to be a clear sign of strength. And going forward, I think that as long as the price of Ethereum can manage to stay above the one-day bull market support band, even if we see some rejections, or even if we see some signs of struggle here, because this area has been a strong reversal spot in the past, right? Especially the 0.5 Fibonacci POI at $3.4 thousand. Even if we see some signs of struggle, I still believe that as long as the price of Ethereum can manage to hold above the one-day bull market support band, if we see some sort of retrace towards it here, like this, before a continuation to the upside, the midterm outlook is still looking pretty bullish for Ethereum. And I think that going forward, the most likely outcome is a continuation to the upside. So yeah, I mean, that's kind of what I've been tracking. And I think that a lot of the importance right now, so I think that it is very important right now to track these key POIs. To not take a decisive stance on the low time frames in particular until we have further signs of strength. The high time frame picture is definitely looking really bullish. And I think that it is only a matter of time, not a matter of if, when we'll have a continuation to the upside. The bull market, in my view, is still very much so intact. I don't think that the cycle has ended. I've seen a lot of talks, especially on X, that the bull market might have ended, that the cycle top is in, that we're going to have a bear market. And I don't think that is the case because so far we didn't have a durable distribution phase throughout this bull market. We didn't have a durable rotation towards risk assets related to crypto. Maybe you could argue that we did have, in fact, the distribution and rotation towards risk assets related to crypto when we had those Bitcoin treasuries rallying. Maybe you could argue the fact that we did have an alt season, just that it wasn't at the scale we've seen before, right? It had smaller rallies in altcoins. So you could make that argument, but in my view, it wasn't durable enough in order to lead to a cycle top formation. And as I've said before, I believe that even if there is some struggle on the low time frames and midterm, right, because of these accumulation phases, the fact that we didn't have that distribution phase in the broader markets, right, with the rotation towards risk assets such as the crypto market, and the fact that we didn't have a distribution phase in the crypto market towards altcoins or Bitcoin proxies and Bitcoin treasuries is a good sign on the high time frames, and it signals that the cycle is likely to be prolonged this time around. So that's my view, and maybe Cat is back, and maybe he can talk about the Hang Seng Index as well.
Yeah.
Yeah, I'm back.
I
Sorry
think
about
I
that.
actually, instead of your chart, I flipped you off. Whoops.
You flip me off all
Yeah.
the time. I
I'm
just
doing it
accept
right
it as a
now.
fact.
All right.
Yeah. Before passing on to me though, Matt, do you have anything to say about Ethereum? Because I want to talk about Ethereum, and I can transition back into the China market. Matt, go ahead.
Yeah, I mean, basically what I was talking about before, with the dominance and everything with Ethereum, how I just look at it compared to Bitcoin, right? Just look at it. It looks like it's ready to continue its journey higher, and to the next fib level up here, it's basically like a big 40% away. Like that could be a lot of big freaking outperformance for Ethereum. And just going back to the regular chart here for Ethereum too, we're looking at a possibility. These are 2-week candles. When we get just flipped to a linear scale, we can actually see a better picture of what's really happening from this time period of the 2000 25 top and the bottom here, how it's just battling this $3,400 barrier. But we can also see how that $2,900 zone actually held quite well as a support. And in actuality, it was a previous resistance zone before the breakout. So all price did was just back test that previous resistance before the breakout. So I think all the signs are showing that I think Ethereum is going to continue higher. It's just at a $3,400 resistance zone right now. So once that breaks, I think we'll see a lot more fun, excitement. But a lot of people are still hesitant, but they're probably going to be hesitant all the way back up because people just don't realize that high time frame, this market structure is still very healthy. There was just a very big liquidity grab that happened last year. That's basically it. And that was kind of a necessary part to just kickstart things. And I think we're seeing that with a lot of altcoins now, right? Ethereum made one last lower low before higher, and so many altcoins are making one last lower low before higher as well. So I think we are going to see Bitcoin probably do well, but I think we're going to start to see Ethereum and a lot of other altcoins do better.
All right. Yeah, if you want to pass over to me, I can also chime in a little bit about Ethereum here too. The thing is, I don't think that at this particular juncture is really that different from before, when right around the time when we start breaking. I'm going to show you a few things here. One is it always tends to scare everybody with these like Morningstar pattern where things just kind of go down a lot, and then it just reverses. Things go down a lot. This is like a down candle, and it just reverses, right? Like that's like a more or less like a Morningstar candlestick. Same thing happened here during the short cycle here too. And then I think so far this cycle, we really had two Morningstar, one over here, and then another one over here as well that may be building. We'll see how January goes. And so far, I don't really think that there's anything, too entirely different, because I also want to tie this whole higher time frame in Ethereum chart here into the IWM discussion as well. Just because it's seemed like it's been lying pretty well over the last two cycles as well. Whenever you have IWM breaking out, usually last two cycles, you can see how the IWM broke out here. And Ethereum actually went down there for about another couple of months before finally reversing and absorbing that liquidity with both IWM going up and Ethereum going up. So I do think that there's a little bit of rotation that's still happening. Same thing over here. Whenever you have IWM breaking out, Ethereum actually shows a little bit of relative weakness over here until it doesn't, right? And I think the same thing might be building up here as well. If you just look at the overall technicals of Ethereum, there's really not much to be too entirely scared about, actually. Just look at the couple of indicators here with the Ichimoku. It's very healthy to backtest the weekly clouds, very healthy to reclaim the blue line, the Tenkan here as support. If you're also just looking at the moving averages over here, you can see that it has finally reclaimed last week up to 50, which is blue here, 50-week SMA and 100-week SMA over here from resistance back into support. The 20-week moving average is still above it, still going to be resistance, still negatively sloping. I think it's probably need some time to kind of consolidate and kind of break through and turn it flat a little bit before breaking through, but so far it's been pretty healthy. So I actually don't really think that on higher time frame, Ethereum is looking terrible by any means. A lot of support down below. Lower time frame, hey, I don't really claim to know, or try to figure out exactly what's going to happen, because to me it really doesn't matter. If you also look at Ethereum dominance too, very similar thing happened last cycle as well. You can see how Ethereum dominance is kind of building a base over here. And you can see how the same base is happening with both small caps, Russell 1000 and Ethereum dominance. And the same base is also building up here and here, right? And I think we broke out of that base over here so far and forming a bull flag, kind of like we did over here before, for a bullish continuation of Ethereum outperformance. That usually goes together with confirmation with IWM breakout. So I actually feel pretty strong about Ethereum here moving forward. Now, finally, if you're asking me about what I think about the Chinese market, and I'm going to say I think I feel very, very good about the Chinese market. The reason why, just based on logic, they have a lot of deflation. They have to print money to get themselves out of deflation. At the same time, they also have a lot of innovation that's happening, both in terms of AI, in terms of robotics, and things like that. We are at a juncture where I think we are going to end up having to face a lot of resistance, and I think that's why we're having a hard time breaking out so far, is because 0.786 is a big resistance zone. And if you also do, another fit level here, is I think 0.786 over here is going to be also another big resistance zone. But so far, it's been forming nothing but higher highs and higher lows after a beautiful Adam and Eve double bottom and a back test of the Adam and Eve right at the 0.5. You went all the way down to 0.382 over here. These are extremely healthy back tests. Like this April candle, everybody's all scared about like tariffs and whatnot. That's like as healthy as it gets. Dip down to multiple fit levels down below, close above 0.5, above the Adam and Eve. We're ready, right? And then what are we doing? Well, we're facing another resistance zone. Right? I was just showing you the between fit levels and between the diagonal line over here. So we have to consolidate sideways over here for about 4 months, get everybody all bored and everybody all scared. I cannot be that bearish on the overall market if one of the key stocks of the Chinese market, Alibaba, is looking the way it does. It's like I cannot. It's kind of like, you go to the beach, you see you try to find some potential mates, you try to find out who you might be attracted to, who it might be. If you're interested in having children, you want to see what I'm just basically, you want to see whether or not their body shape could potentially tell you whether or not they're potentially potent or not, right? So you look for big butts. I see a big butt here. I see Alibaba forming a very beautiful double bottom over here. And I see it keeps on just back testing it, back testing it, back testing it. This is bullish. Like, I think this is going to end up having a lot of children. The way I see it is this is a bull flag over here. If you put the volume over here too, it's just working out beautifully over and over again. Like, this is like a beautiful beach body. But bull flag over here on declining volume, bull flag over here on declining volume, is doing it again. There's no reason to think that it's not going to be, it's just a normal consolidation and go up. This is a very, very beautiful bullish chart, right? We just had a beautiful Adam and Eve back test, and now we're doing it again. If you also look at a few things here, you look at just the fit levels, it's beautiful. Like, it's basically holding the 0.5, back test of 0.382, breakout. It didn't even bother getting to the 0.5. It just want to break the 0.618, which right now we're having a little hard time doing. But again, I think the consolidation period over here is over. I think it's going to end up keep on pushing up and go higher. If you're asking for other kinds of indicators, I can show you the Ichimoku. We had been rejected over here. Back test the Tenkan, the blue line conversion line over here. Beautiful back test over there. It looks like we needed this back test of the rising Tenkan here to push through the cloud. We're probably going to push through the cloud, back test and go higher. If you're looking at the Super Ichi, which is just a derivative of Ichimoku, you basically have a breakthrough of the Super Ichi and back testing it. Like, there's no indicator based on volume, based on different levels, based on all kinds of confluence, that I'm bearish on a stock like Alibaba. That's why I'm not bearish on the overall Chinese market. If the Chinese market keeps on going up, I really have a very, very serious doubt that liquidity condition is going to be that tight. And I think that Bitcoin would do pretty decent here moving forward. I would also argue that I think maybe Bitcoin ended up having a slump because we're waiting for Chinese liquidity to come in. Because you remember how Bitcoin started doing terribly in October through December? Same thing, right? Both in terms of Hang Seng, both in terms of Alibaba. They were not doing very well. They're just consolidating sideways over here. So maybe we're waiting for the Chinese liquidity to be injected in the system before things.
But those
are my
did
thoughts.
You look at the 2-week Super Ichi for Bitcoin? Did you see the
2-week Super Ichi? Why don't you do it, man?
I want you to pull it up. I can pull it up right here if you don't want to. It's fine.
Do it. I don't want to.
Yeah. So what you're saying about Bitcoin waiting? Well, maybe the wait is over. So here's the 2-week Bitcoin Super Ichi right here.
Yeah, there you go. Oh, ooh. Wow, that's a beautiful beach body. Right
It is a beautiful, wow. So I think it was waiting for more liquidity come in, or just waiting for Chinese stocks, or just waiting for something. But it had a massive breakout, but it took all this time to finally touch the 2-week super trend here, super trend cloud, and now it's going higher. And I think what we see a comment here basically rejected at the fair value gap and it looks bad. Well, this does not look like a bad Bitcoin chart to me. This looks like a very healthy Bitcoin chart that just took a long time to go touch the 2-week super Ichi cloud. And that just coincides with the fibs too, right? That 1.618 right there, 94,357. Like this is looking like a really, really nice potential weekly candle close, or even a 2-week candle close as well. And that's another 7 hours away, 8 hours away. So things are looking good for Bitcoin, but I think things are looking even better for Ethereum.
Did that satisfy your question about the Chinese market, Luca?
Absolutely did.
I'm sorry, I tend to go off rails and make these like unnecessary analogies, but I have to. Like, I cannot not do that.
No, we get it. Hang Seng has a beautiful beach body.
Sorry, continue.
Yeah, so here we have the total 3, and this is one of the last points I want to make, which is that the high time frames are looking absolutely beautiful. So if we look here, this has previously been a strong resistance back in March of 2024. And eventually we had this breakout back in November. And after that, it kind of served as a very strong support point. So we see here that each time it got tested, it led to a bounce, right? And this is on the weekly time frame. So this is a beautiful market structure. And over the last couple of months, over the last essentially 13 months, we've been inside this accumulation phase above a very important high time frame resistance range. So in my view, considering how well the market structure is looking, I think that going forward, the most likely outcome is, even if we have another pullback like this, right, on the low time frames, because nobody can really predict with 100% accuracy what will happen on the low time frames. It is all volatility, all short-term noise. But in my view, we should really be paying attention to the high time frame market structure for all the key markets like the Hang Seng, like the S&P 500, like Bitcoin or the total 3, total others, the IWM and so forth, to see the overall picture. And the second thing we should be paying attention to is the macroeconomic environment. And both so far, even with the short-term noise going on, even with the anxiety on the low time frames in the midterm we've had over the last couple of weeks, the high time frame market structure remains unchanged, and so does the macroeconomic environment. So even if we have another pullback like this for a period of a couple of weeks where a lot of uncertainty and anxiety will once again return to the markets, the most likely outcome, in my view, still remains a reversal to the upside. So that was kind of my ending line. If you guys have anything else to add to this.
I have an others chart that on linear scale that I've been watching a lot, and I posted it a few times. Let's see here. Yeah, so this others chart that I've been watching for a while, it's just been in between these levels for some time. And it's another reason why I don't think the altcoins are dead, because if you just filter out the noise and just look at the orange level here and the blue level here, it's just been bouncing between the orange and the blue, right? That's basically it. But now it's actually riding this blue angle up as a potential support. And the next level up here is 400 billion for others. So this chart, there's a lot of bearishness at support, but there was a lot of bearishness back in April at support. There was a lot of bearishness in 2024 of August at support during the carry trade as well. And there's a lot of bearishness right now. So the theme is people are bearish at support, and this is not changing. Also, it's higher lows, right? It's higher lows, higher lows, higher lows, higher lows. It is not a bearish structure to continue crashing. It's something that's actually a multi-year stabilization, really. Since 2023, it's been trying to stabilize on this orange level, and it has been. So to me, it just says this is taken over a year for things to find stability in preparation to make us move higher. So I'm not scared about the altcoins. I mean, not all of them are going to survive, but if you choose like the large caps and the ones that are still holding trend very well, I think they'll be fine. So I'm not bearish at all. I think we can see some great things in the future. I just think that people lack the patience, they lack the vision, and they lack the conviction.
Yeah, I think we might have had the bear market for alts already in 2025. Like it was an entire year bear market. I admit it. So if the bear market has already gone on for a whole year, does it have to go on for another year because of the 4-year cycle?
Yeah. And I see a comment like, why is Ethereum so far behind? Well, that's so it can catch up fast. That's the reason.
Yeah, I mean, that was just showing why Ethereum was so far behind, because we're waiting for overall liquidity to come in. IWM was the is I think it's still the catalyst, and I think Ethereum is lagging behind that, usually by a couple months. Why hasn't IWM broken up into all-time highs? People have been asking that for about 4 or 5 years. You know,
finally.
Yeah, and then nobody's really like paying much attention to it besides some chartists like us. Like, why are we talking about? Well, there's a reason for it, is because that's where it's probably best to look at and try to figure out what's going to happen next, rather than waiting for things to happen and when price is a lot higher to confirm that.
Yeah, right? And just like, I like things before they break out. I don't know about everybody else, but after it's broken out, I don't really care anymore. Yeah, so things that are being suppressed right now, I think that just gives you many years of accumulation, and if you take advantage of it, it can just compound so fast over time.
Yeah, like I'm not buying Robinhood right now. I'm not buying Palantir right now. I'm not buying Shopify right now. I'm not buying those things that have kind of gone up a lot. Like, that's not what I'm interested in. I even arguably, I'm not buying Tesla right now. It's forming kind of like a little bit of a higher base, but I just rather buy it when Tesla's like less than $200,
which you gave so much time to buy Tesla in the 200s, and most people just ignored it then. And just like Ethereum now, 2000s, 3000s, everybody doesn't want to buy it now because it's not at all-time highs. Like, okay, so when it's 5,000, that's when it's time to buy? Not in my opinion.
You wait for confirmation, you know. Like you only date somebody whenever they're popular, and whenever, like, you know, you never really want to be with anybody unless if somebody like Ben Affleck's interested in them. That's the confirmation that you have. But by then, Ben Affleck's already made.
But then if they lose their job and start flipping burgers at Burger King, then you got to dump them. You got to dump.
Exactly, but then they have potential, but you don't really care about that because they're flipping burgers. Yep. Anyway. Luca, any other thoughts? I'm done. I mean, this is great. Thank you so much for reaching out again, as always.
Yeah, I mean, it was great. I kind of made all the points I wanted to, and I really appreciated your views, and I think that it was great to have you here.
Yeah, it's been fun.
Thank you guys for coming.
Do it again soon.
Yeah, I think we try to keep it balanced. You know, like anyway, like Man and I feel very similar about a lot of things, but I think it's always great to have you, Luca, coming in and kind of telling us what your updates are, what your thoughts are. Hope you're doing well.
Yeah. Thank you guys for coming by.
Yeah, keep it nice and short and sweet, guys. Take care. Have a good one.
Have a nice weekend.
Yep.
Bye-bye.
Yep, bye.